Hello and welcome to Business Incorporated live on Channels Television. The markets are buzzing right now. Here's what's coming up on the show. U.S. House backs AGOA renewal, securing key trade benefits for Africa. And Kenyan startups raise 126 billion shillings in 2025, outpacing Egypt and Nigeria. And the rally continues. Silver hits a new record high at $90 per ounce. It's good to have you join us. I'm Ladi Williams. Let's get a quick check on what's playing out with the markets that we track. Now, let's kick off with oil. We're seeing oil prices paused the run of gains, slipping after 4 days of increases as Venezuela resumed exports, but fears of Iranian supply disruptions, following deadly civil unrest in the major Middle Eastern producer, that's looming over the market. They're capping gains, but we see WTI still holding on to that $60 level by about 79 cents. Then Brent 65.10, 0.57% down. So we're seeing the markets there dropping at this point. That's for the oil market. But let's get a check on the better one now. The metals, that's having a stellar year again in 2026. Spot gold, a big 0.9% advance. But the darling right now, that's spot silver, hitting $90 per ounce. This was trading at the start of 2025, about $29 to $30 per ounce. Is quite the run right there for spot silver. Platinum, $2,400 per ounce, 4.7%. Big jump there, compared to silver. Then we see palladium, that's trading at 1,900. Copper, that's 0.28% up, breaking the $5 level right there. So it's still green on the screen right there in the metals market. Geopolitics, inflation reading expectations there, driving sentiment there, and what's playing out with the U.S. President Donald Trump and the Fed Chair Jerome Powell making the safe haven metal there looking quite good there. And we've seen silver reaching an all-time high this week, breaking past that $90 level. That's a fantastic picture right there. Whoever got into silver at the beginning of 2025 definitely is smiling to the bank right now. All right, to other stories right there. Let's look at funding now, and we see definitely we're getting that data from the big deal. We see Kenyan startups recorded a remarkable performance in 2025, raising 126 billion shillings. That's about $984 million, and emerging as the leading destination for startup capital in Africa, outpacing traditional hubs such as Egypt, South Africa, and Nigeria. Data compiled by Africa, the big deal, a US-based newsletter that tracks startup investment on the continent, shows that Kenya's share of total African startup funding accounted for nearly 1/3 of all capital raised in 2025. Overall startup funding in Kenya grew by 52% year-on-year, underscoring renewed investor confidence in the country's innovation ecosystem. The financing mix also showed a shift in investor strategy. Debt funding accounted for $582 million, about 60% of the total, while equity financing stood at $383 million, nearly doubling compared with the previous year. We see Dollar Hill Law Practice, a leading Nigerian legal advisory firm, has formalized a mutual accountability framework with the Bank of Agriculture as part of a climate finance program supported by the African Climate Foundation, that's ACF. The agreement marks a significant step in strengthening climate finance systems and legal accountability mechanisms that underpin investment in climate resilient agriculture and sustainable development across Nigeria. It brings together legal expertise and institutional financing to enhance transparency, performance tracking, and shared responsibility among public and private stakeholders under the broader climate finance agenda championed by the ACF. The framework, established through a partnership facilitated by funding and technical support from the African Climate Foundation, commits both organizations to ensuring that climate finance flows, especially those directed to agriculture, rural livelihoods, and climate adaptation, are governed by clear, measurable standards of accountability and impact. And definitely, we got that big news. Right now, I'll take you back to the oil industry now. We see French energy giant Total Energies. They've agreed to sell their 10% non-operated stake in Nigeria's onshore Renaissance joint venture, formerly SPDC, to Nigeria Incorporated Varis Resources, marking a fresh attempt to exit aging oil assets after a previous $860 million deal was blocked by regulators. The transaction, which also covers interest and licenses that help supply gas to Nigeria LNG, reflects growing shifts in the country's oil sector as international majors reshape portfolios and local players take on legacy assets. Approval from Nigerian regulators, that's still pending at this point. So we're definitely tracking that one. I would say U.S. House of Representatives, they've approved the renewal of the African Growth Opportunity Act, AGOA, a critical trade program that grants eligible African countries duty-free access to the United States market. In South Africa, AGOA has been instrumental in supporting automobile and manufactured goods exports, with about 22% of the country's exports to the U.S. benefiting, from the scheme, generating billions of dollars in trade and supporting an estimated 500,000 jobs. Our South Africa correspondent, Innocent Timosa, examines what this renewal means for the country.
Based on the statement, the AGOA extension bill approved by the U.S. House keeps all current beneficiary countries, which include South Africa, in the program for a further 3 years until 2028. Now, the approval of the AGOA renewal bill by the U.S. House of Representatives offers much-needed relief for South Africa and other eligible African countries at the same time. When there are global trade uncertainty, it means that key South African exports will continue to enter the U.S. market duty-free, helping local producers remain competitive and protecting jobs, of course, on the ground in critical sectors such as automotive, manufacturing, agriculture, and mechanicals, just to mention a few. Now, looking ahead, the 3-year extension to 2028 provides certainty and predictability for businesses on both sides of the Atlantic. Now, colleague, while shorter than hoped for, it gives exporters and investors the confidence to plan sustained operations and maintain supply chain, particularly in the face of rising tariffs and shifting global trade dynamics. Now, strategically looking ahead, the renewal also support African broader economic goals by, complementing the likes of the African Continental Free Trade Area and encouraging the development of regional value chains. Now, the approval is not yet final. We do know that the bill must still pass the Senate and be signed by the U.S. President Donald Trump. I'm Innocent Samosa for Channels Television News in Johannesburg, South Africa.
All right, thank you for that, Innocent. To our conversation now, Africa's innovation landscape is evolving rapidly with hubs, maker spaces and venture studios creating dynamic environments for entrepreneurs and tech innovators. These ecosystems are not just about co-working spaces, they're about nurturing talent, accelerating startups, and turning ambitious ideas into scalable, world-class businesses. Today we explore how continuous support, hands-on mentorship and strategic funding are shaping the next generation of African innovators. Joining me for this conversation, Rev. Boluwatife Oluwafemi, venture partner, Eridan City. Great to have you on the show.
Thank you very much.
Fantastic. So, talk to me about what's playing out, so far. We're trying to, foster more innovation, from Africa. So hopefully at some point, Africa becomes a net exporter of technology. What are you seeing trends-wise, that's helping us, move in that direction?
Yeah, you see, the SME sector is, especially in Nigeria, is a dynamic sector. We are seeing that, in Nigeria alone, the SME sector accounts for 88% of the jobs. They account for 46% of the GDP, and we export just 6% of the exports. So there's a lot of opportunities we can use to advance this. For example, we are looking at opportunities within energy, opportunities within health, agriculture, as well as climate resilient sectors like mobility, as well as technology itself. So we believe that by exploring this opportunity for that, we can cascade not just SMEs, but help them to unlock new growth ventures and growth opportunities, within some of the things they're already doing that are working.
Right. What would you say, these SMEs need right now to actually, scale at this point? What resources do they need more of right now when it comes to, access?
Yeah, so basically our program is designed to help these SMEs to unlock new growth opportunities, as I mentioned. So we have designed two phases. What we have realized is that SMEs are not just failing because of demand. They are failing because they don't have strategic capital. There are no capital, or a defined financing structure for SMEs in Nigeria. They are too small for, banks. They are seen as too risky for VCs and private equity firms. But we are designing a program that can cater for SMEs to, help them to validate key growth engines within their business and help them to fund those, growth opportunities so that they can scale, as a traditional funded startups would do, with the sufficient, financing and, technology.
Well, I'm wondering, in a high interest environment, getting funding is getting really expensive. Sometimes, even if it's not expensive, most of the time they want so much, from your business to actually give you the funds. At this point, how is this really helping? Are they giving up equity? What are they giving up?
Yeah, it's patient capital. It's equity, basically. So we are targeting businesses that have at least 2 years of operational experience. They have been operating for at least 2 years. So we've deployed this capital. First of all, our first phase is just the first 3 months of, exploring what's working within the business to help them to spot new growth opportunities. It could be starting a new product line. It could be, identifying what are the things that we can put fire on, put fuel, with our $25,000 investment. We help them to now, the remaining 9 months. So our program is a 1-year-long program. The first 3 months is the exploration phase. The second phase is the co-building phase. So we are not just investing capital, we are also co-building with them. And during that period, we're also trying to help them to raise additional funding. We believe that the 25K is just the starting point.
Right. And looking at 2026, what are you seeing so far when it comes to access to funding for most of these SMEs that really need this critical funding?
Yeah. So basically, within the financing landscape in Nigeria, I think the macro are looking good for us. You can see that the Fed rates in America, which happen to be like a leading economy, that often Nigerian investors often go to receive funding from their LPs and all of that. So the rates are a little bit lower, are more favorable in our lights, and I believe that as this trend continues, the naira as well, FX is now a little bit more stable. It gives an opportunity for SMEs that are looking to export, some of their products to be able to forecast realistically what are the things they can, invest in and how they can capture upside, going forward. So I think it's the economy is a little bit, optimistic. So a lot of us are using the word cautious optimism, but I believe that we will be seeing a lot of upticks, within funding and even just for SME and also for startups, this year and going forward.
All right, definitely, we'll take optimism. At this point, for the economy. Thank you so much, Boluwatife Oluwafemi, venture partner, Eridan City. Thank you for coming on today.
Thank you very much for your time.
All right, let's get a check now what's playing out with major markets that we track at this point. We see the NGX. That rally, continues at this point. It's not slowing down. We're seeing on the African continent, mostly the NGX, looking stronger right there. Even though the Johannesburg Stock Exchange, not looking bad, 120,000 points, but just a marginal, just a flat moves there we're seeing, but 120K, that's a huge level right there for the Johannesburg Stock Exchange. Let's get a check on other parts of Africa. Now we'll see the EGX 30, even though it's still high, 43,000, is down a big 1.33% at intraday. at the Nairobi Stock Exchange, closing down. Closing up actually on Tuesday, 192 points. I guess on the road to 200 points. That's for the Nairobi Stock Exchange index. We keep tracking that one. Let's get a check on Middle Eastern markets. Now we see it's also green on the screen. Yeah, recovery in oil market. I guess that's also playing a part right there for this market. Let's get a check on other parts there. The Tadawul 0.84%, but we'll have the lone loser 0.18% down. The Qatari index 11,208 points right there. Let's get a check on U.S. market. Now, we see stock futures moved lower today after the S&P pulled back from record levels, seen earlier in the week. Futures, tied to the Dow Jones Industrial Average 0.15% down. S&P futures 0.15, same. Technically moving the same level, 25,863 points for the tech-heavy NASDAQ there. So we're seeing cautious movement there. It's a sell America trade. It's not going to start, at this point. We'll keep tracking to see how it plays out. Investors are expecting Bank of America, Wells Fargo, Citigroup to report their quarterly earnings results before market open. More inflation data is also on the docket there as December's Producer Price Index report will be released before the opening bell. So we're definitely tracking what's playing out in the U.S. Let's move on to Asia now. We see Japanese indexes hit record highs on expectations that Prime Minister Sanae Takaichi could call for a snap election likely in February. We see it's green on the screen there with a big 1.48% jump there for the Nikkei, 54,341 points. Other parts of Asia that we track there, let's look at the Nifty 50. That's been under pressure for a while now, and the pressure continues right there in India, 0.15%, 25,693 points. And the Shanghai Composite down 0.31%. So those are the laggards right there with Asian markets. So let's get a check on Europe now. Let's see what's playing out there. How's it going, Lars? Great to have you. What are we seeing right there in European markets?
Yes, how you doing, Lottie? It's good to be with you. We are seeing markets in Europe mostly flat, but we are definitely seeing some red on the wall too, and that is coming from the DAX in Frankfurt. Now, not a huge surprise because the DAX has had a really good run over the last week and a half, 2 weeks or so, with pretty much adding to its gains every single day. And I have mentioned it actually earlier in the week. A lot of analysts are saying that the DAX is overbought from a technical standpoint, meaning that the shares in that index are too expensive now, that the valuation is too high. And I've already said that as well. Some analysts are now expecting a correction not too far off. And given that, it is no surprise that we are seeing a little bit of weakness in the DAX. 0.4% right now, so that doesn't seem to be the beginning of a correction, but we've had some talk about that, and we might be seeing that over the next couple of days or weeks. Who knows?
Who knows? Maybe it even stays overbought, for a while. We'll definitely keep tracking that. But, as artificial intelligence is becoming an, ever more important factor now, Europe is trying, not to fall there. Talk to me. They're trying not to fall, behind China, and the U.S. What is the German government planning to do on AI?
Well, Lottie, the German government is planning on building an AI gigafactory. It's apparently willing to invest just a little over 800 million euros to help set it up. And it's all after the EU has laid out a new strategy on AI. The European Union wants to establish 4 to 5 AI gigafactories in an effort to build up European capacities in the sector, build up an AI infrastructure on the continent, also that we don't have to almost exclusively rely on the US any longer. And when I say we, the goal is to give business and corporations more European AI capacities, as well as the government. The stated goal is to foster cooperation between science and business to help realize AI technology projects and concepts.
And what would such an AI, gigafactory, what would it look like?
Well, Lottie, the EU has a pretty straightforward definition for an AI gigafactory. It asks for a data center with at least 100,000 semiconductors specialized in AI technology. These chips are obviously expensive. They also need a lot of power to run. So the cost of such a gigafactory is expected to come in at between 3 and 5 billion euros. There are now some companies out with an interest in building up these plants. One concrete offer comes from a consortium of the German telecom provider Deutsche Telekom and the Schwarz Group, that is a leading retail and technology giant. They are counting on these hundreds of millions in government support from Berlin, but also the same amount of funding from the EU. But in addition to money, they're also asking for something very specific, and that is for the government as well as other companies to promise to become customers and actually get their AI needs serviced here. For now, all German AI users are in some way tied in with the US, obviously for lack of options. And the aim is to get them back to do their business here on the continent for two reasons: to gain more independence from the US, like I said, but also to support the expensive infrastructure that needs to be built up here to even get there.
All right, thank you so much, Lars. We'll definitely keep, tracking developments right there in Germany. Thank you.
Definitely. Thank you, Ladi.
All right, let's get a check on what's playing out with the crypto market at this point. Definitely, we're still seeing Bitcoin there trying to make back some gains, trying to maybe get back above $94,000. But we're still in a huge struggle right there. But it's green on the screen at this point, 3.19%. Trying to make that run again, 95,000. Then Ethereum, that's looking even stronger there, $3,295. Let's bring in Olumide Adesina now, financial market analyst. Hello, Olumide.
Good afternoon.
Good afternoon, Olumide. Great to have you. Definitely, word on the street right now: crypto traders, they're gonna be taxed, at some point with the new tax laws in Nigeria. And looking at, 2025. It's like the crypto market is not making that much money like it used to be. That we're not seeing the 10x, the 100x anymore. What's there to tax in this market?
Yeah, there's a lot to tax actually, but the market is actually consolidating. We're seeing Bitcoin springing back up with uncertainty around events in Iran. That has also increased inflows to the pioneer crypto asset, and also Ethereum has elevated above the 2,000. However, coming back home, you understand that the federal government have been running deficit for a period of time. Crude oil prices has been below the federal government benchmark for a couple of years, and unsurprisingly, they're looking for ways to close the gap. So, crypto remittance, crypto transaction play a key role. Nigeria has one of the youngest population in the world. A lot of these young people trade through that channel. So the federal government has their bet that they can recover some funds from that. However, that has put them at the federal government at the tax spot, because that has added the result that the government doesn't mean well for the crypto. So I think the government has really performed poorly in terms of the PR approach of putting in a carrot rather than a carrot and stick at the same time. You recall that Binance at some point was banned from the system, and that's the most popular crypto exchange in the world. And also, you pretty much seen investment in terms of crypto venture into the Nigerian space has plummeted, despite the fact transaction has increased. So I don't know how we play, but definitely it's going to really harden a lot of crypto traders in Nigeria, Ladi.
Right, and talking about crypto traders, we know they like to trade on centralized exchanges or decentralized exchanges, as DEXs. What's the consensus here? How do you tax the DEX?
Yeah, so on the centralized exchanges, I'm very sure that the federal government will mandate, through the NRS and agencies will mandate regulated exchanges to include NIN or the TIN of any of their customers, so that they can track. For DEX, I think it will be more of insiders information. Particularly, we could see what happened in P2P, where some of these channels were exposed by other parties, third parties. So I think the government will definitely increase intelligence in that side, intelligence gathering with digitalization and the new tax law in shape that makes it quite difficult, despite the anonymous feature in DEX. So, Ladi, yeah, why you could say DEX could be a bit problematic for the federal government. We also know that a little number of people really take trade on that part in Nigeria.
All right, so, in your view, which countries have gotten it right, when it comes to taxing crypto right now?
Wow, that's a very tricky question, but you can't exclude the world's most powerful economy, and that's the United States. They've been able to increase investment, particularly around stable coins, and make Bitcoin some form of systemic. And that was not all about President Trump. And also, you could also look at the fact that Bitcoin has been treated as a commodity, not a security. So the tax clarity had been quite successful. But you can't take away from areas like Dubai that has been able to attract UAE, that attract Binance to set up shop, and a lot of firms are also building in that place because personal income tax is zero, and there are a lot of friendly reforms around the crypto space. So it's between the United States and the Middle East, like definitely.
All right, we'll see how we can
Africans.
learn from those ones. At this point, it always seems it's so hard to put a grasp on this crypto market. Thank you so much, Olumide Additional, financial market analyst. Thank you.
Thank you for having me.
All right, so for most of the markets, new highs. Looking at silver, Bitcoin in a green at this point. We'll see if that holds, but that's our major markets we track are looking today. Some are good, some still struggling at this point. Well, thank you for watching Business Incorporated. I'm Ladi Williams. Bye for now.